It's sort of, yeah, it actually sort of seems out of almost the pandemic playbook, right? In the pandemic, we decided we couldn't let any airlines fail, and so came in to support them. Not sure why we need to do it here. I think that the market has certainly recovered. The airline market has recovered since then. I think that there's probably too much capacity right now in the U.S. market, and that's why some airlines are having problems generating profits. Spirit at the tip of that spear, having the most problems generating profits, and so it seems to me that we again need to cut down on capacity. So, having some airlines leave the business is probably the sort of the right way to fix it. But I guess the White House feels differently.
That's kind of where I want to go, George. I mean, what's the marketplace telling us here? It just seems like, boy, if you're not one of these big three airlines, it's just a tough business. I mean, is there a market for some of these more regional, lower cost airlines?
I think there is, right? But the market has definitely turned, I think, against sort of most harshly against these low cost carriers, right? Because I think really, right now, sort of the state of play in the U.S. airline business is you need a strong loyalty program. So you need to be able to put a credit card in the hands of your loyal flyers. They're using that credit card for dinners, groceries, everything else. You're selling the credit card company miles, which is boosting your profits, which you can use to support the flying business. And then the big full service carriers, they also have the premium. I think there's a lot of premium travelers, a lot of baby boomers who've retired, business travelers who will pay more for the front of the airplane, and the back of the airplane seems very competitive. They're using those loyalty programs and that premium revenue to subsidize the back of the airplane to a degree. So again, telling me that there's just too much basic economy capacity. Having Spirit leave the market would be one way to get rid of some of that basic economy capacity.
We're seeing airlines start to reduce capacity as well because of the higher costs from fuel. Does that bring us more back into balance?
It's a beginning of that process, absolutely right. And so Spirit had its problems before the Iran war. So again, that's why I think it's more the market really does have too much capacity. I think now, for however long we're going to see these much higher fuel prices, the market has even more excess capacity, right? So look, if we return to $2 a gallon jet fuel, I think a lot of these airlines that are starting to take some capacity out would take those parked planes, put them back in service, and we'd be off to the races. But at these higher fuel prices, the airlines have to push through price increases. And the economics of that is when something costs more, less is demanded, and the airlines are seeing it. They can't get fares to rise enough to cover that increased fuel price with this level of capacity in the marketplace. And we saw United, we saw Delta, we saw Alaska all announce cutting back at least growth plans. Nobody's cutting in to capacity levels that they flew last year, starting to cut growth plans. More probably has to happen.
George, United Airlines out with some numbers, and they reduced their full-year guidance. Now, this looks like an earnings estimate like I would put out, between $7 and $11 a share. You could drive a 747 through that, George. Does that just reflect the uncertainty they have in kind of their whole P&L?
Yeah, I mean, it's a wide range, and United has really gone to the less is more on the guidance world. So every other airline will give us a sense of what the cost available seat mile could be, right? They'll talk to us about where operating margins could be. United, for the last, I think it's about a year now, they just throw an EPS at us, a wide EPS, and they're like, yeah, you guys go figure it out. So they're the poster child for less is more in the guidance world, and yeah, that's what they gave us this time too.
It's kind of how they figured they're going to play the game, right? Yeah. Let's talk about Boeing, which narrowed its cash burn in the first quarter because of rising deliveries. How do these numbers look to you?
Yeah, I mean, they looked as expected, all right? And so, look, the progress towards the recovery at Boeing continues. Lowering cash burn's always great. The defense business showed a profit, which was nice. Global Services continues to ring the bell, 18% margins. We love that business. It's a little bit of a black box. You don't always know what's going on there, but I hope it just keeps going.
Right.
And the commercial airplane side, Spirit Aerosystems got folded in at the end of the year.
That's right.
And we would have expected a better result out of commercial airplane until Spirit got rolled in. And so there's some work to do down at Spirit. Boeing said, go figure, they were buying fuselages for more than Spirit
Right.
can make them for, or less than Spirit can make them for.